So I said in the last video I would address market risks in general to do with precious metals. Now, before we get into this, I want to say a couple of things about the videos I do and the style I do and why I'm doing them. As a business owner, I don't have time to be doing professional editing, and I really don't value all of that editing that much anyway. I know that people are kind of used to seeing professional editing and different things, and a lot of people do it, but a lot of people that do that are running a YouTube channel and trying to monetize it and trying to make money from it. So it stands to reason that they would spend the extra time. So as a business owner, what I'm trying to do is concentrate on the information, things that I think people need to hear, and I try to get it out there in the simplest way possible. So for me, the best method is just to boot up the computer that already has my custom blurred background and get the idea out, because a lot of the times I'm, in the middle of different things and I have these ideas rolling around and I really want to execute on them when they come into my wheelhouse when I have time to think about them, because they only make the rotation when I don't have other commitments. So I like the raw, unscripted. Oftentimes I'll have a couple of notes to go by, but most of the time I just have the idea there, or the kernel of the idea, and I know what I want to say about it. And I just prefer the authenticity of a natural presentation. Not that there's anything wrong with production and swipe frames and different things like that, but I think it isn't necessary, at least in these type of scenarios. And so let's get into risks. So on that note, I'm not a professional market analyst. I don't have a degree in finance. I've taken some basic courses in how to use a financial calculator and things like that over time. But mostly I approach the market as a generalist. I approach it from a number of different angles, like macroeconomic and geopolitical, and because I think when it comes to finances, there really is a geopolitical issue, and it is a sort of a macro issue, because nothing, in my opinion, works in a vacuum. I always say, don't take an asset and look at it in a vacuum. I'm always saying to compare, right? So when we talk about risks, one of the risks that often comes to my mind when I work through a scenario of being a precious metals buyer, because I am a precious metals buyer too, but because I own a store, that puts me in a different dynamic. So I try to put myself back in the shoes of people that are just retail buyers and think from their standpoint. And so one of the things that come up in a conversation I had one time, and I was talking about market risks and different things that I perceive were risks within different assets, when I was talking to a customer, and the idea of market risk with metals obviously comes into the frame, because that's what we do here. And I said, he said, well, silver and gold haven't gone up particularly in the recent years, and so why wouldn't I just hold on to my cash if I'm going to buy silver and there's going to be a premium on it? And when I maybe want to access some of that money later on, let's say I run into a problem. I got my stack of silver. I run into a problem and I need to sell a little bit, and maybe the market hasn't moved, so I'm going to take a little bit of a loss on the sale because of the premium. That's a legitimate concern. So this is going to take a bit to work out all the bugs to do with why, but the simple answer is this. The intent should be, just my opinion, with any investing, not with precious metals particularly, but any investing, unless you have a specific intent to do something aggressive in the market, you're trading or something like that. But most average consumers that don't have time and don't have the inclination to learn all the technical skills, and that makes the majority of people that have those, don't want to learn those technical skills, nor do they have the time. Personally, I think silver and gold are a great asset for people like that, for a number of reasons, because any stock or any paper asset you buy technically can go to zero. Silver and gold have never gone to zero and are unlikely to go to zero, because they're not based on a promise to produce something in the future. They are something in the present. They are an asset, and they are debt settlement, because you have it in your hand, the work has been done, the money's been paid, currency's been paid, and you now hold the asset. It's like buying a piece of land with cash, except it's portable. So silver and gold can never go to zero. So that removes a huge amount of market risk for the average person. It may not have the upside potential of some other assets, but it certainly doesn't have a lot of downside based on its history. So that's a really good way to reduce a lot of risk, because there are risks of, you could be involved in a scam. There's been plenty of, Bre-X comes to mind. I mean, smarter people than most of us have lost millions of dollars in Bre-X because somebody didn't do their homework and make sure it was a legitimate investment. And that can happen. Now that's a rare occasion, so that wouldn't be the first concern on my list. But losing a lot of value, losing a lot of dollar value in a stock is a common problem, and so it is a real risk. And they can, as I said, go to zero. Gold and silver cannot go to zero. So that removes a huge amount of risk right there. That's one checkbox that you can look at that's important. But getting back to the scenario where, let's say, you buy it with intent to hold for long term, which I think is smart, and most people think is smart. In this particular scenario, for most average people, I know there are exceptions. People are going to get all over me. Yeah, but this, yeah, and those yeah buts are legit, but not in this situation. I'm framing this conversation for a specific modality, and that modality is long term. So people thinking long term buy some precious metals, and something happens, and they just don't have access to any other liquidity, so they have to sell some of their metals, and they're a little underwater on that. Well, number one, at least it didn't go down to zero. You're losing a little bit on your premium, which is unfortunate. And of course, this is unintended. So that would be a problem for some people. They would say, well, why didn't I just hold on to my cash? Okay, I'm going to address that, because see, the fact is that cash constantly loses value. Let me say it again. Currency always loses value. Look at a long-term chart and you'll see that it always loses value. It's just the nature of currency. We talk about it all the time. And that is a risk. It is also a silent risk that a lot of people are not good at calculating or understanding and observing, and especially people that don't have a lot of time to follow charts and follow markets and try to look at, how much inflation is affecting us, particularly if you believe the CPI, as everybody calls it. You're going to be off by, orders of magnitude in some cases when it comes to loss of purchasing power with your currency. So that is a guaranteed 100%, should be number one risk with any asset you hold, is the currency value that's reflecting it. What is that doing to the purchasing power? So that being a guaranteed baked in risk, that alone is enough to step out of cash, because at least with precious metals, you're not bearing that identical risk. And you say, yeah, but it's denominated in dollars, so it takes the same risk. Yes, but it can also gain. Now, the fact that it hasn't gained a lot, well, what's a lot? Really, I mean, gold has outperformed the S&P for the last 20 years. Now, that's on a long-term cycle. So in a short-term cycle, you may not experience those benefits. And that's what we're talking about here, in a situation where it's a short-term cycle. You have to cash in some silver or gold, and you're not happy because you're taking a little bit of loss on it. Well, yeah, that could be perceived as a conundrum, but knowing at the time of purchase that you were intending to do it long-term, and that currency is 100% risk of inflation silently eating away at your purchasing power while you're sleeping and not thinking about it, it almost always makes sense to move into some sort of an asset, whatever it is. That just taking gold or silver out of the picture, any asset, because of the nature of the currency devaluing. So not being able to get around that, it's an obvious choice. I mean, if you have any kind of risk that's a guaranteed built-in risk, you have to address it. Now, like, I'm not going to get into every risk in the market and all that. I'm not a professional analyst. I'm not a professional, risk analyst that looks at market risks and things like that. And most of us don't need to be and don't want to be anyway. So I approach it the same way the average person was, because in many ways I am the average person. So I just try to take all the things that I hear from all the different pros out there that are smarter than me and specialists in their given area, and try to extract the most important aspects of those things and talk to other people about it. That's what a good generalist should do. I'm not trying or pretending to be the greatest gold and silver or market analyst in the world. Never had any intention to. What I really want to do is I want to reach ordinary people that are struggling, don't have the help or the resources to deal with their finances on their own, and just impart some of the wisdom I've learned in the last 30 or 35 years being involved in this, and make sure that they have a basic understanding. Because for the most part, silver and gold are a pretty simple investment. Yes, there's a lot of complexity in the markets, and a lot of that complexity is relevant to some people. And as I often say to people, they'll come in and they'll be talking to me and they'll be listening to this person and that person, and I'll say, "What do you know so far?" So we're talking about a new buyer, and usually they're confused. And I say, "Yeah, that stands to reason, because not everybody out there is talking directly to you and your concerns. Many of the more mature people that would be the people that you would find when you would go searching on YouTube or some other video platform, or like blog or something like that, the people you're going to find are the people that have a presence online, that have been there for a number of years. And usually they've pulled their audience up with them as they progress, and will often be talking at a level that may not be relevant to you as a beginner. And let's face it, the majority of the people in the markets, right, coming into the markets right now, are new. There's a renaissance in gold and silver now in terms of new people coming to the market and having a look at it. And those people are coming from a basically zero understanding, other than the bit that they've picked up that, like I said, most of them will tell you that they're confused. So I try to keep things very simple for people, because I do believe in my heart, not just because I think people are simple or anything like that. I just think that the most important, like you could probably list 50 or 100 different things that are relevant to metals, to precious metals. But like most things, only 3 or 4 or 5 of those things are really going to impact the average person. So why spend so much time on the periphery when the core things about investing in precious metals are really the most important? And given a certain weighting of importance, that's also important too. They're going to cover most of people's concerns. So just to recap, and knowing that, and this is true for any investment, so take precious metals out of it, but remember that when you're thinking about precious metals too, that currency is a guaranteed loser over time. The longer that time passes, the worse it is, because inflation does compound. This 2% inflation target we always talk about, that we've got so used to that we don't even debate whether that's a good idea, compounded over a lifetime, can steal a pretty significant amount of your purchasing power, and nobody's really warning you about it. It's just happening. And until turn a certain corner and realize, hey, I can't afford my lifestyle anymore, that's usually how most people experience inflation. So knowing that now, and factoring that into your decision making with any asset, it has to be considered that you're better in an asset, in my opinion, than in cash. Now, that being said, cash is important. Having access to instant liquidity of cash to purchase items that just may need on an ongoing basis, or being able to make a deal quickly or something like that, or just having some emergency money put away. And when I say cash, I mean just money in the bank, or could be cash in hand, but I don't mean cash per se. Talking more like a money manager now in terms of cash. Yeah, sometimes it's important not to spend your last dollar on precious metals, and to hold some cash back for whatever reason is important in your life. So I think that covers it. Just consider all the risks involved in any, like if you're going back to my other thesis, which is about owning multiple different assets as you're deciding where to put and allocate capital within your different asset mixes. Always just consider all the risks involved. Sit down and maybe write all those risks down. Listen to others that talk about market risks that may alert you to things that you might not be aware of. Run the idea back and forth with your spouse. If you got a spouse that's got the same sort of mindset you do about investing, and you're not doing it kind of solo and on your own, sit down and talk about perceived risks, because some of those risks are going to be personal to you too. So I think it's important to look at all the risks involved in assets. You might want to write a bunch of different assets on a paper, and say, our properties and the cottage and the land we own, and I got a bit of crypto and this and that and the other, gold and silver. talk about what the risks actually are, at least in your personal opinion, and then you can draw on information from others to make choices about those risks and write them all down so that you can take stock of them and notice them. And that'll probably help you make asset allocations better and decide how deep or how much you want to move into any particular asset when you're ready. And probably also help you in the decision, because there's two things about buying any asset. There's buying it and then there's selling it. And I often say to people, I personally think the energy put into the sales aspect is probably more important than buying it, because there's timing involved and different things that need to be considered. And most people at the time of purchase are only thinking about purchasing. But I say, it's important to think about selling the asset too. And on that note, I often say to people that are coming and they're starting into precious metals, become a student of precious metals as you own it, because that's going to help educate you to the market. Like I always say, don't take any asset in a vacuum. You got to look at where it belongs in the market, value, relative value equations between it and other assets to move allocations of dollars around within the asset mix. All of those things, very important, all got to be considered. So that should be enough to keep the average investor pretty busy, staying on top of their investment mix, and to fare them good stead going into the future. So become a student of precious metals, because it's between the time being that, I just said that buying it is less than, knowing all about silver and gold before you buy it is probably not the most important thing, because it's such a safe asset, has such little downside. The most important thing is after you own it to begin educating yourself more and more so that you can make better decisions down the road about what to do about either acquiring more of it or selling some of it off or selling all of it off or whatever. That's the time for learning, is in that span there. So put risks as a big question mark in your understanding as you're learning going forward with precious metals. Thanks for listening, folks. Share the videos if you don't mind, and like and subscribe if you haven't, and have a great day. Thanks for your time.